Hello everyone, good afternoon and welcome to today's Trading the Markets Live with the Live Trade Room, and I'm your host Tim for this trading session. So it's good to see some new subscribers and those of you attending. So I hope you're all keeping very well indeed. Sorry, let me see. So Satyaman, good to have you on board. I don't think we've spoke to you for a while. So Corey, great to see you as always. Thuso, hello and welcome. Okay, so those are just a number of you who have posted a couple of comments. So use that chat function as you wish throughout the session, and we'll interact as we go. Okay, so so without further ado, then, if I could just draw your attention to our risk warning before we begin. Obviously, trading financial markets are inherently risky, but this allows us to make sure that we have a strong focus on our ability to manage risk, both prior to entry and also during the trade management process. So what we look to do during this session is to effectively look to identify some high probability opportunities, making sure that we understand the market conditions in which we're trading. We are then looking to focus on how do we stack the odds in our favor to execute trades in these markets. Then once we've done that, we need to go into a process where we look to manage that trade effectively. Now, of course, that means different things to different people. We'll discuss many topics in and around trade management, all with one reason, and that is to generate consistent returns. So if your decision making and your execution is very choppy, if it's very erratic, you're going to struggle to make consistent returns, and that's hopefully what we'll assist you with during this live trade room. Okay, so that's just a little, just a comment on our risk warning. So before we trade the financial markets, we want to have a brief understanding of the news flow, the items of news that have the potential to impact our decision making. So for this, we'll get up Forex Factory, currently up on screen now, as you can see. And what you can see for the majority of the day is very, very little news, major news events or high impact news events that could impact our trading decisions. Now, one significant piece of news is the crude oil inventories number, which will be due out at 3:30 p.m. and that's UK time, so do be aware of that. Now, the forecast for the crude oil inventories is -2.6, so we'll have a look at this. And in actual fact, for those of you that join us through the live trade room, we'll be having a look at this figure live at 3:30. In addition to that, not an awful lot in terms of significant news events. A lot of these figures have come in pretty close to expectation, and they're largely medium and low impact news events. So really, we've looked across the markets. We've been looking all day on and off, and the volumes are pretty light. There's not significant aggressive moves in any of the markets that we normally trade, and we normally look to trade our foreign exchange markets and see what opportunities can present themselves there. So we'll have a look at crude oil very, very shortly. So as you can see, outside of the geopolitical events, and there is some significant major news events obviously in the process, and first one is with regards to a trade war, a global trade war, and concessions and tariffs and all of these things, which is certainly a concern for the financial markets, in particular the equity markets, and sort of more sort of regional, looking at the Brexit negotiations could provide a lot of volatility, and there's obviously ongoing negotiations all the time. I can see a few of you have just posted a few comments, so I'll come back to that very, very shortly. So there is obviously significant, more recently, Trump quoted again, used Twitter once more to basically show America's aggression towards Iran. That's obviously has an impact on instability, and the financial markets react accordingly. So there's definitely a certain degree of let's say, hesitation in the markets, and we can see that through price action. So that's really what we focus on. We focus on what price is doing. We often go and find out what has caused the moves afterwards, but primarily we look to focus on price. Okay, so let's get up our trading platform then, and we'll start going through the charts. Perhaps before I do, let me see. Scott, great to have you join us again. Yeah, how long do you think yen weakness will continue for? Sorry, Corey, let me go back a couple. So Corey was saying also the pound yen. I assume you just mean have a look at the pound yen, obviously, if you get a chance. And we will actually come on to the pound yen and we'll have a look at this trade, because that was one of the trades we were looking at for the European Open this morning. And we'll have a look at that price action shortly. So we'll come on to that. Scott, how long do you think the yen weakness will continue for? Now, I mean, this is not a bad place to start, really. We're seeing a bit of strength weakness across the board. We were looking at, in fact, we spent a bit of time yesterday discussing some of the yen pairs and the Swiss yen. So you can see the difference between the dollar yen, which is still looking quite bearish, and you compare that and contrast with the euro yen, which is very much indecisive from a technical perspective, but has the potential to be causing a little bit of consolidation around these levels, with the potential for this market to basically squeeze higher. So it could very well be imminent, where we're certainly seeing the yen weakness in terms of the pullback off the highs. So that's what we're seeing across the board, is actually the yen strengthened, but only over the near term. Prior to that, we've been seeing yen weakness from sort of mid-March onwards, and we're seeing this upward pull. Now, a couple of opportunities we're looking to basically trade would be effectively a breakout above the 111.54. It was something we discussed a lot yesterday, and we got close to that level. But as always, when we trade these markets, if the trade setup doesn't conform with us the way that we want it to, then we literally apply a little bit of patience and back off, and don't necessarily be so aggressive. And that was one of the situations we saw yesterday unfold. However, we're still firmly trading within yesterday's and also Monday's range from high to low. So that's the dollar yen. The euro yen is in a similar position. So again, we've had a little bit of yen weakness creeping into the market. We've seen structural failures to the upside, and now we are currently pulling back from a previous high. So we might actually start to see the yen, which has been strengthening over the last week or so, now begin to weaken once more, and see if we get a next move to the upside. So how long do we think the weakness will continue for? Well, all of these trades have the potential to create series of don't forget, a downtrend is a series of lower lows and lower highs, and definition of an uptrend is a series of higher highs and higher lows. So so what we're anticipating, if I just get my pen to try and just break this down for you, actually, Scott, we can look at the euro yen. So what can be argued from a technical perspective is we've seen a series of okay, this probably isn't the best of examples, but we do get a slightly awkward bit of price action there in that level, but the principles are very much the same. So something happens. So these are all. So this is effectively a downward moving market, where we're seeing, even if it's marginal, we're seeing marginal lower lows as this market moves lower down to this level down here, to 125.28, and apart from this one, we're seeing lower highs. So this is our initial high, that's a lower high, Okay, that has a marginal gain, but you can see the consolidation building around this area in at this price. So it still has the potential to provide some resistance around at levels, and we're carrying on in our journey to the downside until something significant happens, and that is a break of this level in here. So that is what is so significant to us, because this is effectively a structural failure back to the upside. So when we're looking to trade a downtrend, we're looking to see that kind of formation, and when we're looking to trade an uptrend, we're looking obviously to see that. So so to just make it a little bit easier, are we likely to see some more yen strength? The answer for us is absolutely. That is perfectly possible, where we get potentially a move up to this. How long this move will last for, we obviously have no idea. What we can do is focus on trading price action, looking to understand market conditions, have a directional bias where it's just us looking for opportunities to buy, and trading the market conditions as they unfold. So how long this market will continue for, we really don't know. What we would need to see is a little bit of obviously European strength come into the market, along with a little bit of yen weakness. This would give you the bigger move, but certainly short term it stacks up for us to take this market to the upside. And a similar analysis can be applied to the remaining. This would have been a much better example to share with you. We have the clearly defined downtrend, series of lower lows and lower highs, and then from mid-March we have a succession of higher highs and higher lows as this market is pushing up. So we do identify with the dollar yen that this level in here has the potential to provide us with a little bit of consolidation, and if that's the case and we get a nice sort of bullish bit of price action coming off of this zone, then we'll be looking to buy this market to the upside, which would effectively be your yen weakness trade. And when we trade the yen, we also have one eye on the US equities, so I'll come on to that very, very shortly. So so what I'll do is I'll go through all of these trades, and we can look for those opportunities to reveal themselves. The markets have been very lightweight, very, very slow moving today. I'm sure you guys probably are of that opinion yourselves. Now, if you have been trading today, it'd be very interesting to see what markets you were looking at. We'd be happy to look at those markets as well. So do post it into your chat function if you have taken a few trades today, and of course let me know how you've got on with those trades as well. So today really, I mean obviously if an opportunity presents itself, we're going to take it, but because of this lightweight market trading conditions today, we might focus on perhaps some of the decision making processes that we go through, and certainly we will look to identify a couple of opportunities as well. But we may not get the explosive moves that ordinarily we would like to trade. So starting with the euro dollar, we have a bit of a process that we go through when we look to identify an opportunity. And that's what we mean by identify. So becoming a master of price action requires you to identify the opportunity. So we have a bit of a process that we can apply to that. So we need to understand what the market conditions are. And for us, when we look at this chart, we can see, if we just take note of the highs of the 1813 level roughly and the 1536 to the downside, we can see since mid-May this market has been sort of moving in between these levels. So the market conditions are consolidative, so they're effectively moving sideways. So if that's the case, of course we can look to sell the highs and look to buy the lows. It then changes our whole approach to risk and risk management. So when we find ourselves in between these two levels, it's a tough decision to make. Okay, now there's a bit of bullish biasness coming into this level. Now the high probability trade for us is to trade above the 1813, and that's ordinarily what we look for. So we're not really interested in trading poor quality setups. We like to to stack the odds in our favor, and to do that we use genuine support and resistance and a little bit of visual kind of analysis. And what I mean by that is we need to have a directional bias, and from this level we were looking for many opportunities to look to sell this market to the downside, and we were able to capitalize on many profitable trades during that time. Now we're in this little bit of sideways moving price action. We're quite happy to back off. It did present some opportunities intraday during this level, but in terms of directional bias, it's not so clear anymore. So we've got a little bit of a question mark hanging over our decision making during this time. Now this is just the process of, I suppose, consistent, a very consistent approach to trading these markets. So we're identifying the market conditions as being consolidating or sideways moving. They don't always give you the best high probability opportunities, these markets. So if you can identify the market conditions, you can then apply a little bit of patience to your trading. And don't forget, if you're not ultra aggressive with your capital, then you have the better chances of actually preserving that capital and waiting for those really high probabilities opportunities to present themselves, and then you can be very proactive when the time is right. So, and that's really the key. So that's what's important for trade identification. And as we can look into this, if you guys do have a strong opinion on whether you are looking to buy or sell the euro dollar, do post it into your chat box. Do let me know. Yes, today more recently has been looking a little bit more bullish than certainly it has been for the majority of the trading day, and the range is very small. So we're talking about a 36 pip range in the euro dollar, one of the biggest markets in the world, no, the biggest in terms of volume in the world, and it's moved 36 pips over the course of the trading day. Please take note of that, because if you're looking for a 30-40 pip winner, today is not going to be probably the trading conditions in which to achieve that kind of result. So it's being realistic with the market as well. So we are seeing a little bit of a bounce back move, and this is one of the trades we are going to look at. Let's go into this market on a 15-minute time frame. We can see the recent move to the upside. We need this market to clear the 31.73. You can see looking at this price action currently up on screen, we're currently experiencing a little bit of a rejection off that level, but let's see where this market closes. So the trade idea would be quite straightforward. It is a pullback trade. We're not going with the market, so it is a counter trend trade. So again, understanding the market conditions, this is the direction in which we would really like to trade this market. And as long as you know that this little move in here is counter trend, it's going in the opposite direction as the overall prevailing winds. So when it comes to risk management, you can take perhaps slightly smaller risk on a trade like this because it is counter trend. So we're going to run into resistance at some point. So do be aware of that. You get this market just turning around, rolling over to the downside, unless we get what are called structural failures. So this is definitely a good opportunity for us, which we'll look at very shortly. So going through some of the remaining markets then, kind of in similar situations, like this is just purely a pullback off the highs. However, we're currently at this level of resistance. All right, we're a little bit below the 111.11 level. We're looking for price action to just turn around at these levels. In addition to that, so if this market sells off and continues to sell off, it's very likely to run into resistance at some point soon. So again, from a high probability trading opportunity perspective, it doesn't give us the best of signals. A bit of selling coming into the dollar Swiss, so we're getting to see some Swiss strength in this market, and we're getting this rollover. But as you can see, we're currently navigating above and below the parity level, the 1.00, and we've been doing it for quite some time now. So really struggling to break above this 0059 level, 1.0059. Now we can, of course, we can put a little bit of supportive analysis supporting prices at these levels. We can put that in there. However, it doesn't really give us the clean setup that we ordinarily look for. So interesting to see a significant amount of Canadian strength come into this market. Now, for those of you that will be joining us in the live trade room, we'll have a look at the crude oil inventories at 3:30, and we're very likely to see this impact or the crude oil inventory number potentially impact this market quite considerably, either to the upside or to the downside. Clearly, we are getting a little bit of a break below this handle, but we will also be very likely to run into resistance around these levels just below this current price. So yes, we will have a quick look at it. We'll have a look at the pound dollar as well. So that's the dollar CAD. That's the move to the downside, just literally over the last half an hour. So looking for these other opportunities, we can see some pretty messy price action coming in at around this level. And again, since mid-June, the prevailing market conditions for the Aussie dollar are very much sideways. So you can see a structural failure would constitute a break above the 74.82 to the upside, and also 73.43 to the downside. So that's the Aussie dollar. The New Zealand dollar looking stronger than the Aussie, but we're still within this range effectively. So we've got a lot of resistance just above these levels, and again, it doesn't give us that high probability opportunity that we're looking for. The euro pound, we did get that move yesterday in the end, a really strong move. So those of you that were able to join us yesterday, below the 89.08 level, and we did get a nice continuation for the remainder of the afternoon. And today we're just sort of hanging around that level. We're now technically back inside this descending line with a lot of resistance above it. And to just perhaps those of you that perhaps new to joining us during this webinar, we're in a 10-month sideways moving market. So again, that's the market conditions. We don't find from a consistency perspective that you can generate significant consistent returns trading choppy markets or sideways moving. We by far get our explosive moves off the swings, off the structural failures, off the pullbacks, off the breakouts of those consolidative levels. So we do really like consolidation because it gives us some fantastic opportunities. The thing is, what we need to do is to be very patient to capitalize on them, and that's what we spend our time doing, is just really scrutinizing these markets and waiting for those opportunities to reveal themselves. Okay, so that's the euro yen. So we're currently experiencing this little pullback. Now, what this market tomorrow and the day after might give us some opportunities if the yen starts to weaken. Currently, the strength seems to be with the yen as things currently stand. We're seeing the sell-off in the euro yen, and we can effectively see the similar price action. It's currently relatively strong against these particular currencies. Even the pound yen, which did see today briefly a break above the 146.31 level. Now, we obviously didn't get the follow through, so it actually wasn't a tradable opportunity for us in the end. And we can have a look at that particular breakout. So when we look at this bit of price action, we can see the rejections of these levels on multiple occasions on a 15-minute price chart. So at this point, we're thinking this isn't really a fantastic opportunity for this market to move higher. However, it's clearly not really selling off too much. Okay, we get a little bit of a roll, but then the market sort of finds a bit of support, and then we get the explosive move to the upside, creating a new high. The problem with this was on a 15-minute time frame, we clearly saw a sort of a 40% a 40% retracement, should I say, on this high in a 15-minute candlestick. And that, when we go down to these smaller time frames, really give us a bit of a structural failure at these levels. So we did see the market continue to kind of create a series of lower highs and lower lows, and of course that is something that what was a concern to us. Plus, we were looking in other markets as well, and we weren't really seeing much follow through as far as the pound is concerned up till the start of this session, ironically. So we're getting a bit of upward momentum coming into this market as we stand, or as we look at these markets, but we're firmly in this period, long drawn out period of a little bit of consolidation with the potential for a lot of resistance around this price. So it just, in a nutshell, it enabled us to just back off the trade a little bit. We didn't quite get, I suppose when we trade these markets, we want to get the correct setup in place. We want a really good, strong, positive risk reward to the upside. We want to perhaps use technical analysis and indicators to stack the odds in our favor. So it does need to stack up for us. We want to get the I suppose another thing to assess is the kind of the quality of the setup. Are we getting other opportunities in other similar markets? Are we trading strength versus weakness? And we want to try and get we want to sort of stack the odds in our favor in this way. So if we get a situation like that, then we're very happy without thinking to go and trade these markets. The problem is, if we go through that checklist and we really like some aspects of it, but then we say, do we get the risk reward that we're looking for? Have we seen a rejection to the upside? All of a sudden we're left with a slightly different outcome. And that's really why we focus with our traders on decision making, because when you get a green light, trade it without a doubt. And when you get situations where it's a pretty good opportunity, might not be fantastic, but it might be pretty good, then you can assess it in a very sort of objective manner and decide whether you trade it. And normally, if we get these question marks just hanging over the trade, normally we suggest patience. Now, we're not saying that these sorts of trades don't give us really good winners. They very well can do because of the precariousness, but maybe just taper your risk management approach with trades like that ever so slightly, just to take some of the risk off the table. Okay, so that is the pound yen, and as you can see, some of these opportunities are few and far between. We're approaching these highs once more, so we might take a quick look at that market, and we're extending lower with the potential for this market to squeeze down to these levels. So we'll keep a close eye on these two. So we'll come back to those very shortly. So moving on to some of our commodity markets then, and like I said, normally we go through these a little bit quicker. Today we're going to go through them in a bit more detail, just because of the sort of the lack of volatility in this market today. So with the looking at the commodity markets, looking at the gold market, we're seeing a bit of a pullback off the lows. That is all this represents. There is still strong downward pressure in this market. We're getting this price pushed back to the 12. Well, we're currently at 12.33. We're very likely to see a little bit of resistance in this market around the 12.37. So if we get this market pulling back to this level over the next few days, and we see a little bit of this sort of turnaround momentum, seeing rejections to the upside, and seeing a bit of consolidation around this level, and then if we start getting some selling candles coming into this market, we might look to take this market to the downside once more. And again, we've been trading this since we had the confirmation of the break. That's confirmation 1, that's confirmation 2. The rest of this trade was very much in the management of each trade to the downside. So we look for these really strong signals in these markets. Okay, so that is the gold market, just getting a little bit of a bounce, hopefully back to the 1237. Again, not a fantastic high probability opportunity for us. The US oil, going into the crude oil inventories, it'd probably be better off that we just wait and wait for that opportunity in the crude oil, and to see if there is appetite for this market to push to the upside once more. And let me tell you why that is a potential viable trade for us. It's because we've been looking to buy this market on many occasions over the last year, and all we're seeing really as things stand is a strong pullback to a previous level of support, and maybe the next leg to the upside in the US oil market can originate from these sorts of prices. So potentially a fantastic opportunity in the pipeline. I mean, as you can see, the last 4 or 5 days we've seen some rejections to the upside actually, so we do want to tread carefully with this market. Yesterday was quite bullish, and today now we've got a little bit of a selling coming into the US oil market. So the S&P 500, again, been pretty indecisive today really, to be fair. We had a strong rejection of these highs in the S&P 500. It's always useful to determine whether the stock markets are in a state of risk on or risk off. So if they're in a state of risk on, they're all looking to push to the upside, and if they're risk off, they'll be coming off, and traders will be looking for opportunities in markets like the yen and your safe haven currencies, and also commodities as well, like the gold market, for example. So straight away we can see that the S&P is in a very marginal sort of green day today. The Dow Jones is negative, and the Nasdaq is marginally positive as well. You add that to the UK market, which is very negative. There's clearly a mixed picture in these markets, and again, a lot of the undercurrent behind that is very much global. It's global trade, it's indecision in the markets, it's light trading conditions, it's the fact that it's approaching sort of the end of July, and all the bankers start to go off on their holidays. So for all of these reasons, we're getting a mixed picture, and that's the importance of analyzing and understanding these market conditions when you trade. UK oil, similar situation really to the US oil, the crude oil market, WTI, and that's the market we'll be looking at very closely during the crude oil inventory. So it might present us an opportunity in that market very shortly. Okay, so that's just a little review of the markets that we're looking at, and really we've only identified two what we'd call relatively poor quality setups, bearing in mind that we're not ultimately we're not seeing moves in any of the other markets really to any great extent. So we might put the pound dollar on the left hand side of this chart, and we'll put the dollar CAD just on the right here, so we can keep an eye on this price action. So we can see the 31.73 now. If you guys have any other trade ideas that perhaps you'd even like us to look at, do post it into your chat box. More than happy during this session, because you can I'm sure you can see that the opportunities are not fantastic for us. So so if you do have any markets that you'd like us to look at, post it into the chat box. More than happy to have a look at some of the trades that perhaps you might happen to be looking at. So let's go into these two in the interim, the pound dollar. So let's just get an overhang. So when I said that these two markets are not fantastic opportunities, it's because they're counter trend. It's because they are in the process of pulling back, and we've already pulled back a significant amount off the lows. So it just means that the probability of a successful outcome is not necessarily fantastic. So that's the pound dollar. We're seeing this market just pull back on a daily time frame. So let's see what's happening. Smaller time frames. We have a double top now, or the potential for double top. 5-minute chart, you can see in a little bit more detail what that means. So we've got a really strong 5-minute candle followed by a complete rejection of that high. And then if you go down to multi-time frame analysis, you can see that we've had literally 2 minutes of strong upward move followed by a really strong correction of that level. So and this is in 1 minute we've literally we've created a bit what's called a bearish engulfing candle, overshadowing the previous two candlesticks, enabling this market to just pull back. So now we're left with the interesting decision, and what we'll do is we'll work with these highs because they're clearly of importance. 31.77 level, and let's take a note of this level in here. And it's providing a little bit of support around the 31.68. So when we now look at these markets, we know exactly what we're looking to do. We're looking for an opportunity. If price breaks below the 31.68, this is a structural failure to the downside. It's just a poor quality trade. If we get a confirmed break above the 31.77, so we're only 9 pips away, we're currently trading in the middle of that, then we're very likely to get an opportunity above the 31.77 and place our stop loss. So we might look to enter at this price above the 31.77 with a stop loss approximately 10-12 pips stop loss on this trade. However, we need price action to confirm, is it going that way or is it going to eventually roll down to the downside? We obviously don't know. We need price action to determine what we are going to do with this market. So so let's look at those two levels then. If we break above the 31.77, then it's a continuation of the pullback to the downside. So it's just a counter trend trade. Trading below the 31.68 would be in line with the trend, but on a small term time frame, the more recent price action is very much bullish. So it's just a poor quality trade. So there's much better opportunities to capitalize on. So we're getting a bit of a, so let's do the same analysis then for the dollar CAD. So we can see we've had a strong move within the last hour to the downside in the dollar CAD. This is probably very much preparatory going into the crude oil inventory figure. We'll obviously have to wait and see. So on a 5-minute price chart, we had a bounce off the 30.86. We've seen a 7 or 8 pip pullback to the 30.93 level, and now we're extending lower. So let's have a look at this on a 1-minute time frame. So this is why multi-time frame analysis is quite important, because you can clearly see that we are now technically in this kind of range bound market environment. So so now we're just getting that little break to the downside, and if that's the case, then we'll get continuation to the downside. It might be worth just taking a very, very short trade on that market. So we'll just have to wait and see. And if you identify these levels, you can quite clearly get the rejection to the downside, followed by, again, some aggressive price action looking to push prices lower. So what this trade is all about is dollar weakness against the CAD, and a buy trade above the 31.72 would represent dollar weakness against the pound. So let me know, guys, if there's any markets that you happen to be looking at. So now we're seeing some dollar strength come into this market. So this is, of course, it's a viable opportunity. It's just a poor quality one. So it just makes this price action a lot more choppy than it needs to be. It can be argued as well that there's a strong level of support in and around these prices. So as things currently stand, these are just relatively poor opportunities, and that's all they really represent right now. So we're not too fussed really to get into any of them, to be fair, as things currently stand. Yeah, hi Scott. No problem at all. We'll certainly be here for the next 15 minutes or so. But if not, you can obviously join us through the live trade room if you wish. Okay, so yeah, so just looking at the gold market, yes, we have looked at that. We were pulling back really, and it's very likely to pull back to the 1237 level. So again, from a trading opportunity, we'd expect it to pull back a little bit further than these levels, but like a poor quality trade there, Scott. So yeah, listen, we look forward to seeing you next time. No problem at all if you need to shoot. So this is what we're currently getting. We're getting an intraday reversal in the pound dollar, poor quality, and we are getting, I suppose if we look at the dollar CAD, what you can see is potentially a double bottom in this market, which would be an intraday reversal actually to the upside, where we might start seeing a little bit of dollar strength come into this market like we're seeing against the pound. So so quite happy to just look at these, just monitor these trades and see if an opportunity exists. And I suppose this is the reality for most traders in that it's often more about patience actually, and being consistent in your approach, and knowing really what you want to do and have a plan, and then look to trade that plan. And the more experienced you become at trading, the easier that process is. So all of these can have profound impact on your ability to be profitable and to be consistently profitable, and just focusing on what price is doing. And quite often you end up making some common sense decisions in terms of entries and exits. And when you get into that stage in your trading career, it's a great place to be, where you have a high degree of confidence about your decision-making processes. And all of it can be learned. All of it is just a case of obviously practicing the right approach, I guess, as opposed to a very choppy, very unstable, erratic approach, I guess, is in our opinion, is what's important. Okay, so if you're just wondering why we're not sort of trading this market, it's a pullback on a daily time frame, and you know, we want to be sure what direction we're trading this market. Are we looking to buy it or sell it? And when we do our analysis, our directional bias is for the expectation for this market to push higher. So we're looking to buy. We're not looking to chop and change. We're not looking for loads of opportunities to capitalize and sell the highs and trade these ways, in which obviously loads of traders trade that way. That's certainly not the high probability trade. Those traders that sell the highs and buy the lows, it's much better if you get the market move behind you when you're trading, and you get a lovely big push from the markets, and you can let your winners run. And obviously then during situations like that, trading is a very, very rewarding and enjoyable experience. But you have to get the infrastructure right, and that's really what we focus on with our traders, is to focus on the execution and the decision making that goes into trading these markets, and obviously what we're referring to is your methodology and your approach to risk management things, but it's putting it all together and really assessing every stage when you trade, and that's really what we focus on. Okay, so now we're seeing this little pullback. That's not really the trades that we like to look for from a consistent perspective. So we do want to cherry pick the right opportunities. So that's not really that great for us. We have a situation now where the dollar is strengthening against the pound. So there may be some pound related news coming out. So like this might not necessarily be dollar strength. In fact, let me verify if that's the case or not. So seeing a little bit of more recent dollar strength coming into this. This is a structural failure to the downside, but again, it's a counter. It's an intraday counter move. Dollar yen, not an awful lot happening, and a little bit of support maybe coming in for the dollar against the Swiss. Certainly, the dollar's been strengthening just more recently against the Aussie dollar. Not much change really in the New Zealand dollar as such. So just more recently, we're seeing a bit of pound weakness creep into the euro pound. So I guess during markets like this, it's just important to point out that patience is probably your best friend during market conditions like this. Some days we get 4, 5, 6 opportunities during the session. Other days, like today, we might get 0 or maybe just 1 opportunity. So it's just really the way that the markets unfold. And if you look across the markets and there's a lot of indecision, it's just one of those days that maybe you might be better off, not being too aggressive with them, not being too active. Protect that capital if you possibly can, and only really look to get into strong only look to get into really strong, high probability setups, and that's certainly what we'll help you with here at the live trade room. Certainly during the session. So as we're looking at a bit of strength coming into the US dollar, it's marginally strengthening against the euro, but nothing of any major concern. Not an awful lot happening against the dollar yen. Okay, so I'm just very conscious of the time, guys. So we actually have our live trade room starting at 3 o'clock through the live trade room. So what we'll do is we'll start to pack up. We're not missing an awful lot really. So those of you that do want to join us through the live trade room, feel free to jump online. and we shall all see you shortly. Those of you that would like or be interested, if you like our approach and you would like to join us for the remainder of our live trade rooms, then subscribe to the channel, where you'll be notified, of course, of let me take that back. You'll be notified of the live trade rooms, but in addition to that, you will also be able to be notified about our daily trade watch, where we identify some high probability trading opportunities for the day ahead, and we look at the signal prices as well, to look for those opportunities. So subscribe to the channel below, and if you can read through the details that we've posted, there's also a link to our website. We're currently offering people a 14-day free trial, so if you would like to see or get access to our live trade rooms, have a good do sort of enjoy what we offer effectively for 2 weeks, completely free of charge, with no commitment whatsoever, then that you're very welcome to join us on that. Now the other thing is the price point. So we do pride ourselves on giving you the opportunity to join our live trade rooms and also access a large amount of content in terms of education and other trading related content, all for very affordable prices. So if you click on the link below for a 14-day free trial, please do just take note of the cost incurred if you decide to stay on, because I'm sure you'll be pleasantly surprised and very pleased with the cost structure for you to continue with us. So so what I'll do then, I'll let you go for the session. If you'd like to connect with us, obviously subscribe to our YouTube channel, like the video if you can as well. Join us also on Facebook, Instagram, Twitter and LinkedIn. The details are there currently up on screen. And all that's left for me to do now is to thank you as always for joining us. We do look forward to perhaps seeing you again tomorrow at 2 p.m. So from everyone here, take care and we'll speak to you soon. Bye for now. Bye bye.